The meeting. Stop video. Why is this video not showing up? Am I going to drop everybody when I leave the meeting? An 800 number, really? Why is my capture card not showing up? Why is it not on? On. I'm gonna go fucking ape shit right now.
as an investment. You said you had never bred animals before. You have absolutely no idea what that involves.
Mommy, yes. Oh. Oh. Water's in there? Yeah. Hey, well, be careful, okay? Yeah. Do not dump. Abby. That's not stuff. Abby. Abby, don't dump it. John, you can make your channel, please.
All right, I'm gonna do this in 5 minutes.
Right, and you can't leave. And you can get out of that water. I'm going to make it. I don't want you to do it. And I don't want you to do it.
Mike, the setup completely changed. We're no longer using laptop.
You. Can you hear me, Mikhail? Okay, but you can hear my audio?
Yes.
Oh.
Is that Susanna?
Yes. Yes, I am connected.
Okay, I am too, but I can't unmute.
Well, I can hear you, so I
Oh,
think
you
you're,
can?
yes, so you are unmuted. On the lower left, if you put
Yeah.
your cursor on the lower left, there should be a little microphone, and underneath it are the words mute.
Well, I have a big phone that says mute and then unmute, which has a red thing. So it seems like I'm on unmute, but who knows?
Yes, you're unmuted. We hear you. And if you press that microphone, then you'll be muted.
Am I muted now?
No.
I can't mute myself. Shit.
Oh, wait, you know, you're speaking to the entire meeting.
I know, sorry. Okay.
44 participants. All right, well, I'm going to mute myself. I encourage everybody to mute. Thank you so much for your patience and your diligence in helping us get this done. We really, really appreciate it. We're going to try to start right at 10. So again, Schumann people, I just encourage everybody while we're waiting for the meeting to start to mute.
Okay. Mute. Got it. Oh, you could hear me?
I'll have one.
I don't know.
Susan?
I don't think
Yes.
it mute.
Yes, we can hear you. Go to the lower left.
lower left.
Take your
Actually,
cursor.
if you're- this
There's
is
a
Susan,
mute
if you're on
button.
an iPad, it's you click on the upper right on my iPad and you'll see mute video, whatever. And that's where it is on my device. That was what was confusing. And I have this
Lower
thing that says,
side.
please mute on my screen, but that doesn't work. So click the upper right and you'll see all this. Okay. And then you can stop the video. That's what I think works for me. I don't know what works for everybody else. Okay, that's the last.
I found the mute button. I'm going to press it.
Like we all have our Republican.
Susanna, it's Patricia Riley. If I only see the icon of a person and not myself, does that mean that I'm not being shown to everybody else?
Exactly.
How
Exactly.
would I? Do you know how I would get my video? Like,
Yep, there's at least on my computer, next to the mute button, there's an icon that says start video. So if you'd like to show your face, then press start video. If you just want your name,
We're offering, Carol. Nope.
oh, okay, all right, I see
we
myself.
see you. Yep.
Thanks. All right. Good morning.
Hi. Good morning.
Good morning.
I hate myself on video, but
Well, we're
All right.
all happy to see you.
all right, I'll mute myself now.
Okay, good.
I was looking around like, you know what? I don't think I know how to make coffee.
So again, just to remind everybody, this meeting's going to start at 10. So, you know, if you want to grab coffee or go do something for 15 minutes, we appreciate you being on.
Hey, Susanna?
Yes,
Susanna?
Yes.
So when we go into executive session, we use a whole different link.
correct. And John, I've gone through the run-up show with John, and he's going to explain that to everybody. Okay,
Okay.
so just stay tight.
Thank you.
Yeah. So they're concerned about some happens to that other lady.
Hello, Susanna? Can anyone hear me?
Yes,
Yes.
Pat, we can hear you.
Yes, Pat,
Yes, we
hear
can
you.
all hear you.
This is Pat Dunn. I guess you guys can hear me?
Yes, Pat.
Oh. This was a very, very, very hectic morning, but we're working out the bugs. So happy about that. And this will be of assistance when we have our Board of Trustees meeting. So although it's been stressful, I thank the Controller's Office for throwing the hat in the ring.
I am against quarantines.
Okay, thanks, Pat, and everyone, you should mute until we get started here.
Okay.
Situation, don't cause more density, don't sneeze in someone's face with
Or other dudes on the thing.
Bloomberg, I got my phone. I don't know why I'm having so many troubles.
Best practice for everybody, because I think that
All right, well, good morning, everyone. It's almost 10 o'clock. And so I think that We have 63 people in attendance, so we will get started in 2 minutes. Does that make sense for our facilitator, John Adler, and our tech support, Mikhail?
Good for me, yep.
Okay, great.
Alex looks so lonely.
Mike is here.
All right, that's better.
You can only see me. It's a cam. I know, yeah.
To ask a question, do we unmute or do we send a chat message to the facilitator and then he'll queue up the people with questions?
I'm going to explain in a moment, Aldrin. Okay, it's 10 o'clock according to my phone. So we're going to get started. Welcome to the New York City Retirement Systems Common Investment Meeting by Zoom on Wednesday, March 18th, 2020. Before we call the roll and before we go over the instructions for the meeting, I'm going to ask Controller Scott Stringer to make some opening remarks.
Okay, and I think we are waiting for him to be in the meeting.
So should we go ahead and call the roll, Susanna?
Can you just wait 1 sec, John? I'm sorry. I think that I'm trying to see if he's currently on.
Let's not, that's fine. Let me go over the ground rules.
Okay, I see Scott Stringer on the, Mr. Controller, are you on the video?
I am. I see Mr. Adler.
Okay, go ahead. I think everybody.
Okay. We're happy to hear from you, Controller, sir.
Well, first of all, I want to thank everybody for being here, either from a remote location or another outlet. And I do want to say to Alex and Mike and all of the trustees, thank you so much. We all know we're in a very difficult moment, uncharted waters. I don't have to tell all of you what's at stake, but I do want to thank everyone, the staff, all of our different folks who make this work to make sure that we get our beneficiaries the checks that they need, the retirement security they need. And I know this is going to be very difficult. So I just wanted to say to all of you, keep doing what you're doing. This is the moment that we've prepared for in a way. It's easy to do this sometimes. It's a lot harder to do it in moments like this. But there's so many experienced people at the table, so many people who have great ability that I know we're all going to get through this together. And I want to thank you, Suzanne, and all the trustees and staff, Mr. Adler as well. Thank you for being here today. And we're here to work 24/7. And I've been meeting with Alec and everybody on the pension fund to make sure that we have what we need in terms of resources.
Thank you very much.
Thank you, Mr. Controller. And with that, I think let me just talk about how to speak, and then we'll go into roll call. So across the bottom of your screens, as the screen that's up right now.
You're in now?
I'm in, thank you.
No, thank you very much for your patience with me with this.
Oh, no, thank you, I appreciate it.
Okay, folks, you gotta mute.
If I don't know
Everybody,
something,
you need to mute,
just said,
Thanks.
have a good day.
okay? So the first thing, everybody needs to mute their audio. There's a mute button in the lower left-hand corner of your screen. So please hit that mute when you're not speaking, because when you have side conversations, everybody gets to hear them. And then, so right now we do the roll call. You just unmute, say you're present, and then mute again. In general, when you want to speak to a presenter, they're in the middle of that control bar at the bottom of the screen. There's a tab that says participants. If you click on that, at the bottom of that tab, whatever you call it, the thing that pops up, you see a thing that says raise hand. So if you want to speak, raise your hand. I will keep that up, and then I'll call on you so that we're not all trying to talk all over each other at once. Okay, if you have a question on this, raise your hand, and otherwise we're going to move into the roll call. Okay, so let's do the roll call, and I'm going to start with teachers. I think I heard Thad. Thad, can you call the roll? And again, when you're here, unmute yourself, indicate your presence, and then mute yourself again. Thanks. Is it Thad?
Yeah, I'm here, Patricia.
Patricia, great. Please call the roll.
All right, John Adler,
Yes, I'm here.
Thomas Brown, Natalie Green Giles, David Kazansky,
Present.
Russell Buckley,
Or Chief Financial Officer Lindsay Oates, present, Russell Buckley.
Deborah Penny, Susanna Vickers.
Patricia, it's
Yes.
that. I'm on with Deborah. She's having some technical problems. She needs Kim to resend the link,
Okay,
but to their personal email addresses. Somehow it
Okay,
must have
let's-
caught up in their spam.
Thad, let's take that offline.
Okay, I just want. All right.
Okay.
So Kim will take care of that, Susanna.
Yes.
Okay, so Susanna says that Kim will take care of it. She says thank you.
right, okay. All right, I believe we have a quorum.
And I'm here.
Yeah, Susanna Vickers.
Here.
All right.
So do we have a quorum, or do we need Deborah to be
Well,
on board?
We have we have two city, we have you, we have Deborah. I mean, excuse me, we have you, Susanna, and David. So those are the two city trustees and the one labor trustee.
And Russell Buckley, and Russell.
And
Buckley.
Russell is on as well.
That makes for.
You have 4, right?
Yep.
Yes.
That makes
As
for.
long as you have 4, because you have it, you're good.
Okay,
So we have a quorum.
great. Okay, thank you. So next, let's do NICERS. Melanie, are you on? Is someone on from NICERS?
Yes,
Okay. No, I don't mean trustees. I mean from the NICERS staff. Okay, Elizabeth Guzman, are you on?
yes, I am.
Okay, can you call the roll or not? No, okay, I'm gonna call the roll.
Okay,
So, because I think I can go through it. I'm not gonna do it in order, but I'm gonna start with myself, the chair, and I'm here. Then I'm gonna go to the controller's office.
I'm David Jetter for Controller Scott Stringer. Can you confirm that you heard? Okay.
Okay, great. For the public advocate.
Elizabeth Guzman for the Public Advocate.
Okay, great. So for the Borough President Manhattan. Got to
Aldrin
unmute.
Bonilla from Manhattan Borough President Gail Brewer.
Thank you, Aldrin.
You heard me. You heard me.
I heard you, yep. Borough President Bronx.
Marika Scott McFadden, Deputy Borough President for Ruben Diaz Jr., Borough President.
Thank you, Marika. Borough President Queens. Okay, Borough President Staten Island.
Isaac Gordetsky for Borough President James Otto.
Great, and Borough President Brooklyn. Okay. Now let's move on to the union side at NYSERS. AFSCME District Council 37. Okay, TWU Local 100. Okay, Teamsters Local 237. Okay, so we do not have a quorum at NYSERS at this moment. We'll have to come back and hopefully we get a quorum at NYSERS. Let me just say, folks, if you do have technical problems, the person to contact is Kim Boston in the controller's office, and her email is kboston@comptroller.nyc.gov. Is there anybody from NYSERS who has joined the call who has not been called in the roll? Okay, so we do not yet have a quorum.
So John, I'm reaching out to NYSERS now to see if there's they're all gathered together, so I'm working on that now.
Great. Thank you, John. Okay, let's
John,
move on to.
There's
Yeah.
a chat coming up from Alan Swisher.
Okay, Alan Swisher, have you joined the call? You have to unmute if you're there. Okay.
He said yes, mic issues.
Okay,
chat.
all right, I see that on the chat. Okay, so Alan Swisher is here to represent the Queensborough president. We still don't have a quorum at NYSERS. We need a union side rep to get a quorum. Thank you, Shuman. Okay, let's move to, and I also want to note for the record that Deborah Penny is on the call. Is that correct, Deborah?
Yes, yeah.
Okay, great.
Yes, can you hear me?
That's for teachers.
Okay.
Jeff.
Yes, and Tom Brown should be logging in momentarily.
Okay, when Tom Brown is logged in, we'll hear from him. Okay, so let's move on to fire. Pat Duncan, you call the roll for fire.
Yes, they can. Premier de Blasio,
Cynthia Collins for designee for Mayor Bill de Blasio.
for Controller Scott Stringer,
Jennifer Konovitz, designee for Controller Scott Stringer.
for the Commissioner of Finance, Jacques Jiha,
Phil Dukes for Finance Commissioner Jacques Jiha, and I would just point out I'm seeing a chat from Jeff saying he can't get audio, and we're doing a roll call, and I think he's doing the minutes.
Okay, well, continuing with the roll, for the UFA, Gerard Fitzgerald,
I'll get in touch with Jeff.
Pat, who's getting in touch with Jeff?
I am, Susanna.
Okay,
Susanna.
Okay, all right, but if he can't hear it, this is a problem with the roll call. But anyway, all right, let's keep going. Sorry, Pat, please continue.
Okay, for the UFA, is anybody present? Gerard Fitzgerald, Robert Eustace, Eddie Brown, John Kelly, or Peter DeVita?
As of right now, I believe they're all having issues. John Young has all their proxy at this moment.
Okay, John, thank you. So that's helpful. For the UFOA, I know they are also having technical difficulties.
Yeah, we're trying to get on, Pat, this is Jack Kelty. I'm trying to get on the our laptop. We are unable to load it on my computer, but Sherry Chan is here with us and she has her iPad. So it's
Okay.
William Guilfoyle, myself.
Okay, so we have,
We see all of you. Thank you.
and for Commissioner Daniel Nigro, and for Commissioner Daniel Nigro.
Terrell Brown for Daniel Nigro.
Okay, thank you, folks. We have a quorum.
Thanks, Pat. Okay, for the police, Kevin Holloran, are you there?
I am here. Can you hear me, John?
Yes, Kevin.
Okay, good morning. John, given the current state of the city, there are no union representatives present. Their attention has been diverted to other needs of the city and their members. So we will not have a quorum, but I can call the roll for the rest of the people. Representing the Commissioner of Finance,
Cynthia
representing the Mayor,
Shumon Ray.
representing the Controller,
John Dorsey.
and representing the Police Commissioner.
Stephanie Zimberg.
Okay, so, okay, so no quorum at police. Okay, so we're going to proceed. Let me just ask whether anyone else has joined the meeting since we called the roll at Teachers, Nicers, or Fire. Okay, so just to recap, we have a quorum right now at Fire and at Teachers. We do not have a quorum right now at Nicers, and we don't anticipate a quorum at Police. Okay, so with that, I'm going to turn it over to Alex Donier to do the quarterly performance overview and market update.
Good morning. Can you hear me?
Yes.
Well, first of all, thank you all for joining us during these extraordinary circumstances. Everyone here at BAM hopes that you, your families, and your colleagues are holding up okay. Just wanted to run through the agenda for today. As intended, this is the quarterly SIM to review quarterly performance for the fourth quarter of 2019. Which frankly seems like a lifetime ago. So we'll do some of that, but really the focus of our remarks today will be on recent market developments over the last several weeks. Mike Haddad, as always, will do the fourth quarter update, market update, I should say, review the system's asset allocations and tilts, and then discuss the recent global market sell-off. Mike and I will also be discussing what BAM is currently doing in keeping with your approved asset allocation and rebalancing ranges, but we will reserve that for executive session. In addition, I'll do, again, a brief update on fourth quarter results. And then today we will have Dan Haas, who's a member of our risk team here at BAM, that will present the fourth quarter risk report and review recent market impacts to each of the systems portfolio. So with that, I'll turn it to Mike Haddad. Are they loaded? I was told yes. We can resolve.
Good morning. All good technology-wise? Everyone hear me, see me?
Yeah, your slides up.
John, I miss your smiling face across from me.
Oh, yeah.
Okay, so I'm going to go through the fourth quarter briefly, as Alex alluded to. From an overall perspective, I guess I would characterize it was a re-acceleration of global growth, and you can see that across the returns of the asset classes. Specifically, what I would point to is the very strong returns in all geographies of the equity market, with emerging markets actually outperforming U.S. markets. We haven't seen that in a while, but very strong performance there. And then if you move down the rows, you can see fixed income was up in yield. So long duration had a negative return for the quarter. And again, that's consistent with an acceleration in the global economy. You would expect rates to go higher in the back end, despite the monetary eases going on. 30-year yields were up about 30 basis points in the quarter. And then if you go further down those rows to investment grade and high yield, they were positive returns. And so what that means, in other words, is spreads were tighter on the quarter. So what rhetoric do we put behind that? Three main themes. The U.S.-China Phase 1 trade deal got actually signed in December, but there was a lot of noise leading up to it that it would get done. As I alluded to, stronger economic growth. And then we had another rate cut by the Fed in Q4 and a handful, many other emerging market central banks lowering rates. So that helped ease financial conditions and contributed to the very strong market's performance in Q4. Your portfolios at the end of Q4. These are your normal bubble charts. And this is the growth assets in your portfolio. So the first thing I would focus on is the three floating columns on the left-hand side of this slide, which captures your public equities, which is about 50% of your portfolio, depending on the system. The aggregate of those three sleeves, so U.S. equities, EFI equities, and emerging markets, you were roughly, all 5 systems were roughly in balance. Those sum to slightly positive going into the quarter, anywhere from 0.18 to 0.8, depending on the system. And that, again, was due to the very, very, very strong returns in equity markets. There was no rebalancing activity for that. That was driven by market returns. I'm sorry, I'm gonna go back on this one. High yield. So we've been perennially underweight high yield according to the strategic asset allocations. But as a reminder, those parking places are in convertibles and bank loans, which are highly sensitive credit instruments. So we'll get to that in a second. In your inflation protection portfolio, you're roughly at your strategic asset allocation targets. And then lastly, in your deflation protection. So treasuries, as we know, were overweight, and that's the opposite. That's the offset of what we were underweight, mortgages and credit. So again, these are DEES 3119 numbers. Mortgages were underweight by about 60 basis points in each system, credit underweight by about 80 basis points in each system, and an overweight to treasuries, which offset that. And again, as we know, it's not the percent in treasuries that matters, it's the duration. So where were we with durations at the end of the year? I would draw your attention to the last row in this line, which shows by system where you were in your duration targets. Not much change from where we were a quarter ago. Again, no rebalancing activity. And for NYSERS and BRRRRs whose durations extended, that had more to do with the index moving as well as some cash flows within your system. Let me pause there for Q4 questions before I go into more recent market developments.
So if you have a question for Mike on Q4, hit the raise hand button under participants. So you hit the participants tab at the bottom of your screen. And if you want to ask a question, hit the raise hand. There are no hands raised. So Mike, please continue.
Thanks, John. So I'm going to go through a few graphs and then a table that summarizes some public market returns as of Monday's close. So again, as a reminder, Monday was the really ugly day, down 12% in S&P terms, the second worst day other than October of '87. And just one other factoid, the fastest 25% correction from peak in the history of our equity market. So start with the Russell 3000. You know, it speaks for itself. It's down about 30% from peak. And it's interestingly just down a little bit from where we started Jan 119. Here's the index for EFI equities, also down about 30% from peak, and also down 17% from where we started at the beginning of 19. So you think about those fantastic returns we had all through last year, and those were all erased. Emerging markets, similar story, down 25% from peak, and as comparison to Jan 1, down 13%. Couple slides on investment grade and high yield. You can see the dramatic widening of spreads. Investment grade went from 100 something to almost 250. High yield went from maybe 350 over to a little bit over 800. In high yield, it's also suffering from the collapse in energy. And as a reminder, something like 12 to 15% of the high yield index are energy names. So that is adding to the widening pressure there as well. 30-year Treasury yields moved dramatically lower. Before this all started in mid-Feb, we were around 2%. We traded, this graph shows only going down to 1, but my recollection, Robert, correct me if I'm wrong, we traded something like 87 basis points at one point. Yeah, intraday. So I guess this is a closing level chart. So 30-year yields down a lot. That being said, from their extreme lows, they've actually risen a lot, and that's continue to undergo today as well. So this table captures returns for a lot of the public market indices that your portfolios replicate. Similar slide to where I start with. We've divided it in month to date. So again, this was as of Monday's close, the fiscal year and the calendar year.
Very good.
Guys, you have to mute if you're not speaking. Please mute your audio. Okay.
So as I alluded to with a few of the graphs, you can see the month-to-date changes in the equity market, the fiscal year changes. And then what has performed extraordinarily well is government bonds. Long duration was up 5% on the month. On the fiscal year, up almost 24%. The slightly shorter duration, also positive on the month and the fiscal year as well. And again, not as positive just because of the sensitivity to interest rates. And I think what's interesting is in credit, where you can see the returns are actually negative, and that's consistent with those widening spreads that I showed. So investment grade credit on the month down about 5%, although in the fiscal year column you can see that still positive. And then if you move down the line to, those are two different high yield indices that we that we use, and those are down on the month and the fiscal year as well. And then interestingly, the Barclays Agg, which again, it's a combination of treasuries, investment grade, and mortgages. It's actually negative on the month due to the spread widening. Still positive on the year, on the fiscal year, but you can see the impact of spreads on that. So let me just try and throw a little narrative around all this. I'm sure we're all flooded with the news, and I'm not going to spend a lot of time on the virus. I'm going to try and keep my remarks to markets and the economics. So this all started obviously in China, and the first interruption to global growth came from the supply disruptions from China. So that has dramatically slowed not just China's economy, but the global linkages tied down to that. And from all the satellite-like data that people compile, it seems that China is somewhere in the 65 to 80% restart up as compared to where they shut down for the Lunar New Year. So they are getting back online, but not fully functional as of yet. So following supply shock, now we're getting a demand shock from both the consumers and business activity as we're all engaged in social distancing, and it's this vector that is extraordinarily hard to understand, to quantify, and really difficult to understand. Third part is financial conditions are tightening from the drop in equity markets and credit spreads widening. That had a lot to do with the Fed's activity, so we'll get to that as well. And then you kind of sum it up into where we were, kind of the consensus as of Monday on global growth implications. And it seems that most forecasters have resigned themselves to a global recession in the first half, and that virtually every country is going to have 1 to 2 quarters of negative growth. And the big unknown is the size of the recession, and then how quickly we get out of it. And that is entirely contingent upon the containment and mitigation of the virus, which, you know, sadly, as we all realize, is just unknowable at this time in our society. This was a Morgan Stanley slide that was attempting to capture their global growth forecast going forward. So on the far right side of this slide, the blue line is their base case, with the yellow line being the bear case and the green line being the bull case. So their forecast is kind of a V-shaped recovery out of this. So that's contingent on this being a 1 to 2 quarter event. The other thing that happened over the past month was the collapse in oil prices. So if you look at the graph on this page first, this kind of captures the problem that OPEC was facing. The red line is Saudi Arabia's oil production per day. The dark blue line is Russia's oil production. And the light blue line is the US oil production, which has really been driven by the shale revolution. So OPEC was facing this environment of continued erosion of market share as U.S. continued to go higher, and it put them in a very bad place. So Saudi Arabia kept cutting while Russia was not, and it was leading to a dispute between that. And then we hit the demand shock from the beginning part of the virus, and the demand for energy had collapsed. It put Russia and Saudi Arabia in a dispute about what to do. Neither one was willing to cut production. So Saudi Arabia made a decision to cut their price, and more so to cut their price specifically for Northern European countries to try and really erode Russia's power. So what has that done? Oil is down something like 40+% from the mid part of February. And broadly speaking, when you get this kind of oil collapse, it's negative for producers or countries or companies that produce oil, and it's positive for countries who import oil or for consumers who use oil. But given all the other demand shocks happening with consumers, it's really turned out to be just a negative for those who produce. And in our country, as shale has become an increasing sector within our economy, a ton of pressure on the capital structure within shale, and I think a lot of those things are still being sorted out. And the last point, this is obviously going to be disinflationary, and all things being equal allows for looser monetary policy. So speaking of monetary policy, it's hard to keep up with the events because they are happening so frequently. But I've thrown a few of them up here on this table, this slide. The Fed, 2 intermeeting cuts, which is highly unusual, and the first time since April of 08. Since mid-08. They cut 50 basis points on the 3rd. On the 12th, which was last Friday, they announced a massive $1.5 trillion of repo operations. They did another $0.5 trillion yesterday. And then Sunday night, before markets opened, they announced 100 basis points cut, which takes them to 0, which in Fed speak is the 0 lower bound. And to try and support rates even further, they announced $700 billion of QE with a minimum of $700 billion with no time frame nor no real quantities other than this initial amount. And they announced a handful of other liquidity measures. The ECB has been active. You can see what's on the slide. Japan has been active, increasing QE across a variety of different sectors. China has been extraordinarily active, cutting all sorts of different lending rates, providing fiscal stimulus. And then I've listed a handful of the central banks who have cut rates. This is since, I guess, since midweek last week. Virtually every OECD country now has rates at or near 0, and emerging market central banks are expected to continue to cut rates depending upon the individual parts of their country. This slide just attempts to capture the collapse in policy rates, and you can see on this slide that it's actually lower than where we were in the midst of the European crisis, and it's actually lower on a global scale than where we were in 08 and 09 as well. So the good news is global monetary policy is very supportive. The bad news is they fired their bullets. Moving on to fiscal policy. In the US, we've had 2 relatively small packages. One passed, and I think the other one we're still waiting on the Senate to pass. And then a lot of noise in the news in the papers today about $1 trillion to maybe $1.2 trillion from the US being pushed by the administration. Timing, probability, uncertain at this point. But I think the important point is the federal government is now on board for taking action, and we're going to get something. We just don't know when and how big it is. China has already done a lot, fiscal expansion of 200, 250 basis points. So almost, depending on how you measure it, almost 3% of GDP there. Europe is extraordinarily busy trying to get fiscal policy going. So they've relaxed their budgetary rules. And markets expect a dramatic expansion of fiscal policy. If memory serves, Spain announced something like 20% of GDP, a fiscal plan. Italy's announced something equivalent to about 10%. And a headline this morning said Merkel is even considering issuing Eurozone bonds. So that would be a big break from Europe's traditional, very slow fiscal expansion, and that could be very helpful as well. One other quick comment on the primaries from last night. Biden swept the 3 states. He's at 1171 in delegates. Sanders at 865. As a reminder, you need 1991 for the nomination. So for all reasonable expectations, Biden is going to get the nomination. It's going to be Biden versus Trump, and the polls that are out and which are very early, not very reliable, have Biden winning. I had something like 53-43, but a tremendous amount of uncertainty around that. And as far as markets are concerned, I think markets are less concerned about Biden presidency than they had been about a Sanders presidency. So I don't think that's as impactful on the market as it had been previously. And the last thing, just to kind of sum up markets today, we have this looming economic collapse with uncertainty over how big it is and how long it's going to last, against massive fiscal and monetary policy response. And the fiscal policy response is growing. And it's these two very strong forces that are fighting with each other in the market on a daily basis. And I would say liquidity in the markets is terrible. So you get exacerbated price movements that we've seen day after day. So let me pause there before I turn over to Alex for any questions or comments.
So questions or comments for Mike, and then we'll return to the roll call because there are additional people present. If you have a question or comment for Mike Haddad or on the presentation, please hit the raise hand button on the participants tab at the bottom of the screen. Okay, I'm not seeing any raised hands. I'm going to ask one question myself, Mike.
Sure.
So I think that the total value.
How do I do raised hand?
It's on the bottom.
Okay,
More.
you want to ask a question, Jack?
Yeah, I was just curious, but you gave a scenario of 1 to 2 quarters going as this downward turn. But I'm reading that this could, the entertainment, the travel, food business, well over $1 trillion shutdown to the economy. How do you see that turning around in a quarter or two and not being way more severe than you're portrayed?
I think as far as the economic hit, again, it's contingent upon what the virus does and whether we're able to contain it. And I think you can figure out which way those ones go. As to those specific industries, they total something like 10% of our U.S. economy. And my expectation is that the fiscal plan being negotiated in D.C. is going to target those industries. I think the airline industry was maybe put a round number of $50 billion of aid that they're going to need. So I think that they're going to get a lot of money is going to flow to those sectors from the federal government to try and offset some of that. And just some kind of simple math to help you navigate this. If our economy is $20 trillion, divide that by 12 to get a monthly number. And if this is a 3-month hole, if our economy slows by a third, or a third goes to 0 for 3 months, you kind of get somewhere about 1.5 to 2 trillion of a hit to our economy. And if the federal government's going to do $1 trillion of a fiscal plan, that offsets a lot of it. States are going to be active. Cities are going to be active. So they're trying to plug the hole through fiscal policy. But again, it's so uncertain where we sit today. for all the reasons that we've discussed, that it's hard to have conviction on either one of those views.
No, I hear you. It's just that, like I've said before, with a fire department, we plan for things blowing up. So I tend to look at the downside, not the upside, and what are our protections. So just questioning the, I thought, overly rosy scenario of what we're looking at.
I wouldn't call a 1 to 2 quarter shutdown rosy.
Yeah, but
China's back
State-
80%.
yeah, but the state's going to lose all this revenue for the next few years. They're going to have a huge deficit. The city's not getting, the streets of New York are pretty empty. They're not getting the tax revenue in. Debt's going to be off the road. I think we might be in for a much longer financial hit. And I think we ought to take things accordingly, but that's just me.
Okay, thank you, Mr. Kelty.
Okay.
Are there other questions or comments? If you can, hit the raise hand button. I guess you could also cough and as happened to Jack. Okay, I just wanted to ask a very general question without holding you to anything. So I believe the total assets of the funds as of, and maybe this is a question, forget it. This is a question for Alex, so I'm going to hold off on it. Any other questions for Mike? Okay, so before we head back to Alex, I do believe some other trustees have joined the call, and the NYSERS folks are online. So Melanie or someone at NYSERS, can you just say which trustees are there and part of the meeting at NYSERS?
So at the NYSERS location, we have Dave Katzman from TWU and Larry Bosley from Teamsters, and I believe Ray Santander is also on the line, and Ruben Torres. So we also have obviously the chair from the mayor's office, and we would have the controller's office present.
Yeah, so we went through the rest of the roll before. So let me just ask, Ruben Torres, are you on the call? Can you acknowledge? Anyway, we have Larry, so that's the 237. And Ray Santander, are you on the call? Okay, so in any event, with TWU and Teamsters 237, we have a quorum at NYSERS. Are there other trustees who have joined since we did the roll call? And then, okay, Burrs, I neglected to ask you about your presence at the meeting during the opening roll call. Is Sandy Rich or Daniel Miller available?
Good morning, John.
Morning, Sandy.
So according to the participant screen, we're represented by Russell Buckley, trustee. We do not have a quorum, and our next board meeting is likely to be somewhere around March 30th, where we will have this business.
Okay.
Okay.
Thank you.
And John?
Yes.
Just, this is Susanna, just reminding you that I believe Deborah Penny and Tom Brown have joined from teachers.
We got Deborah Penny already. Tom Brown, are you there? Unmute yourself.
I'm here, John.
Okay, great. Tom Brown. Okay. So are there any other trustees who've joined since we did the roll calls? Okay.
John,
great.
it's John Dorsey. I just want to let you know that I spoke to Ray Santander. He's having a little bit of technological difficulties, but he should be signing in shortly.
Okay, great. Thank you, John. Okay, let's hand it back to Alex to continue the quarterly reporting.
Thanks, John. And this is again going back to the fourth quarter of 19. Quickly on this slide, it's just the AUM per systems, which is obviously dated. It is fourth quarter and less relevant given kind of recent market events. But as of the fourth quarter of 2019, you can see that aggregate assets stood at about $218 billion. So again, looking at performance for the quarter, the fourth quarter of the 2019 calendar year, returns ranged anywhere from 4.64% for fire to 5.9% for BRRRR. You'll notice that the system's results, excluding BRRRR, actually lagged the index portfolio for the quarter. That's primarily driven by the index having a greater weighting to the Russell 3000 and developed markets, so the EFI markets. The 65% component of the 65-35% index is about 43% US and 22% EFI or developed markets, while the systems, if you think about them in aggregate, are, let's call it about 50% exposed to equities, allocated to equities, and that's roughly 30% US, 12% developed world ex-US, and 8% emerging markets. Now, police and fire, I'll mention for the quarter, if you're just looking on a relative basis, other systems did underperform the other systems, and that's primarily due to their relative lower allocation to equities in the other systems, and some hedge funds underperformance in the fourth quarter. I'll mention for BRRRR that your relative outperformance, really was driven by very strong excess returns in your EFI portfolio. Now, with all systems, as you'll see, we're still lagging the 7% rate of return for the fiscal year period. Looking more at the longer dated trailing 3 years, all systems are not only exceeding the 7% assumed rate of return, but also the 65-35 index portfolio and other large pension plans as measured by TUX. Once again, the TUX number is a gross of fee numbers. But again, I feel compelled to underscore these are fourth quarter results. So just really going to the quarter, just so we can do the overview there. Here you have total performance for each system by quarter. And this is, again, versus each system custom benchmark. So as you can see from the bars on the far right-hand side of the slide, BRRRR had strong performance. You see that 56 basis points of excess returns versus their custom benchmarks. Teachers and NYSERS were slightly outperformed at 11 and 12 basis points respectively. And again, police and fire slightly underperformed or trailed their benchmarks at 18 and 29 basis points respectively. Again, on this slide, we break down the components that are contributing to the excess return in the case of teachers and NYSERS, or the lag in the case of police and fire, and I should say the excess return, including BRRRR as well. And you'll notice that it's both a mix of asset allocation, which is that middle column, and manager, either outperformance or underperformance. For BRRRR, as previously mentioned, the outperformance was driven again by its EFI managers, and those being Baillie Gifford and Spruce Grove, relative to their benchmarks. So that is really just a brief highlight of the quarter. I don't know if there are any specific questions going back to fourth quarter.
Any questions for Alex on the fourth quarter? If so, please hit the raise hand button. If you can't find the raise hand button, cough. Okay, no questions, Alex. I think everybody's concerned with the 2020.
And that's why we kept it brief. That makes a lot of sense. Now I'm going to turn it over to Dan Haas on our risk team for the risk report.
And while Dan is walking to the podium, I just want to acknowledge that Tanya Cantlow is also in attendance, representative of the Brooklyn Borough President, but has a mic problem, so we can't hear her. But she has contacted me and is in the meeting on Zoom. Anybody else not acknowledged yet? Okay, Dan, take it away.
Thanks, John. And thank you all for tuning in this morning. I just have a few slides for you, kind of recapping the fourth quarter, and then we also have some more recent market observations that we can share with you as well. We'll start here with our total plan summary. This is for the quarter ended December 31st, lining up with Alex's presentation. This total plan risk summary is the top panel is a portion of the reports that you receive through Convene on a quarterly basis from us. A few quick takeaways. If you look at the top left there, you'll note that the portfolio risk was 7.54% on an annual basis. It's slightly riskier than this particular system's policy benchmark. As a reminder, these are ex post or forward-looking numbers, so they're modeled from an MSCI long-term model.
They're bringing hedge fund people.
Sorry, a little feedback there.
Folks, you got to mute your mics, okay? Thanks.
Right. Okay, so moving to the bottom panel there, this is not a component of the reports that you'd have in Convene, but we plotted for you the portfolio risk, the policy risk, and the portfolio beta for the portfolios on the monthly basis for the year 2019. And we did this just to kind of give you a sense of how much the numbers move around normally. The total risk for the quarter was down by 12 basis points, which is not a lot. The slight change was driven by declines in market volatility of 20 basis points. There was also a diversification benefit, which reduced risk by an additional 10 basis points. And then our exposure to industry-specific risk increased by 18 basis points to kind of net you down to 12. The top right panel gives you the overall risk contribution between equities and fixed income. Gold bars on the left-hand scale represent the portfolio weightings. And then, I'm sorry, the gold bars in the left-hand scale give you the risk contribution. And then the red dots using the right-hand scale give you our portfolio weightings. As in the past, this just notes that almost all of our portfolio risk comes from our equity positions. Moving on, to underline that point, we're just taking a quick look at our factor risk summary. Again, this is fairly high level, but I wanted to draw your attention to the chart on the bottom. The light blue shading on that chart represents our contributions to equity risk factors. Note here that the equity factor risk is present in both our equity and fixed income portfolios. And the reason for that is because some of our fixed income portfolios invested in assets, kind of like high yield, if you were thinking of it, that reflect the behavior of equities. Moving on to more recent events, we assembled here a comparison between the quarter ended December 31st, 2019 and the quarter to date for March 12th. So that's a few days before Mike's observations earlier, so he's a little bit faster than I am with these things. The blue bars represent December 31st, 2019. The red bars are more recent. That's from last Thursday. The panel on the left shows you the portfolio weights in kind of that tannish color for selected asset classes relative to our policy allocations. You can see here that there's been a shift in portfolio weight from riskier asset classes to less risky asset classes like treasuries, mortgages, and TIPS. Compared to performance, you'll see summarized in the top box there. You can see, again, there's sort of a flight to quality demonstrated by the decline in equity prices, which are offset somewhat by an increases in prices of treasuries and other kind of shorter duration investments like mortgages and TIPS. Finally, the bottom panel gives you a sense of how risk has changed in the last weeks. You can see, again, overall risk is ticking up in response to the recent market disruption. I'll just remind you that these are, again, more longer term as our standard measures. The risk look back that we use here has a 1-year half-life and basically roughly a 3-year look back. And if we were to examine this for shorter horizons, of course, there'd be a lot more noise and you'd see a lot more effect there if I were lining the two up. And finally, we ran the March 12th portfolio, so this is a recent portfolio, through a few stress scenarios to give you a sense of where the portfolio would end up in some recovery and decline scenarios. There's a bit to unpack here, but we'll walk you through it kind of slowly. The chart shows you estimated short-run returns by asset group under 4 different scenarios, with each scenario corresponding to a grouping of bars on that chart there. The gray bars represent the return of the total portfolio. The dark blue bars represent our public equity portfolio, which would be include investments like U.S. developed and emerging markets equities. Light blue bars represent our alternative equity investments, which in this case are private equity, private real estate, infrastructure, and hedge funds. The darker red bars represent our core fixed income holdings, treasuries, mortgages, investment grade credit, and TIPS. And then the lighter red bars are alternative credit investments. That's high yield bank loans, OFI. Turning to the scenarios, in the first scenario we plotted on the left there, we assumed that equity markets traded up by 20%. And then we ran that assuming that all of the existing correlations held based on the model. And we estimated the overall portfolio would increase by about 10% as a result of US equity markets going up by 20%. This advance was led by public equities. Here you notice the public fixed income detracts from overall performance owing to its historical negative correlation to equities. And then, of course, alternative credit adds to performance owing to its mix of more equity-like investments, as you saw 2 slides ago. In scenario 2, we retained that 20% increase in US equities, and then we also shocked the fixed income portfolio through a decline in interest rates. This would be a similar scenario to what occurs when quantitative easing regimes work as they're designed to. This tailwind suggests that there'd be an extra 3% return to the portfolio overall, and our public fixed income investments would gain about 10% in value overall, from about a 2.5% loss in scenario 1 to a 7.5% gain in scenario 2. We also see additional gains on the margins from alternative equities owing to our real estate investments and alternative fixed income. Scenario 3 is actually just a reverse of scenario 1. Instead of increasing the US equity markets by 20%, we shocked it downward by 20%. The results are fairly symmetrical. The overall portfolio declines by 10%, led by public equities. You can see some resilience in alternative equities due to our investments, again, in real estate, or real assets, I should say. And you see an increase in our public fixed income investments, as would be consistent in a kind of a classic flight to quality scenario. Finally, scenario 4, we have the same 20% decline in US equity markets, and then we modeled a bond sell-off by just doing a parallel shift in the yield curve. One would think of that kind of as a worst of both worlds scenario, sort of a flight to cash, if you will, or investors are exiting capital markets. And of course, the results are fairly predictable. You'd see every asset class declining here. The overall portfolio would drop by a little more than 12%, with both fixed income groups losing about 5% of their value. And with that, if you have any questions, we're happy to entertain them.
Okay, questions for Dan on the risk report? Raise your hand, hit the raise hand button if you have any questions for Dan. Okay, no questions, Dan.
Great.
Thank you.
Thank you very much.
Alex, anything else for us? Alex?
Yep.
Yes.
Anything else?
Sorry, I thought Dave
Kazansky has a question.
Hi, everybody. So in any of these scenarios, or even, and I guess maybe this is more for
You need these? I'll just.
Alex.
Hey, guys, hold on a sec. If you're not speaking, please mute your mic. Dave Kazansky has the floor.
Just wanted to ask how rebalancing is playing a role in any of the things that we're doing going forward.
Go ahead, Alex.
Dave, certainly, given just the current extreme volatility in the markets, we've been very thoughtful and vigilant of each of the systems portfolios. The rebalancing committee is actually meeting almost on a daily basis and monitoring not only your target allocations per asset class, but your rebalancing ranges and making sure that it is within policy. I will say that any details we should probably discuss in executive session, but certainly both teachers and fire have actually approved a new strategic asset allocation. So we've been very thoughtful about your new ranges, particularly in the equities and fixed income markets, and I think we're appropriate. We've tried to, be thoughtful of those changes. So happy to go into more detail in executive session, Dave.
Thanks.
Sorry, I was just on mute. Other questions for Alex or for the other presenters? Okay. Alex, is there more for public session?
That is the agenda for the public session.
Great. Okay. So let me just explain what's going to happen now. We're going to entertain motions to enter executive session at the boards where there are quorums. And I'm going to give, when we complete those, I'm going to give instructions for how we do the executive session. So and let me just say for the, we need you to identify yourself when you're making your motion and your second for the, stenographer. Okay, so let's start at fire. Is there a motion at fire to enter executive session?
John Young, motion to enter executive session.
Thank you, John.
Jack Kelly, second.
Thank you, Jack. Any discussion? Okay, turn your mics on fire.
Eddie Brown is in the room, is on the chat.
Okay, thank you, Eddie. So Eddie Brown is present as well.
Do you have any clothes in your
So fire, turn your mics on. All in favor of the motion to.
right now.
Okay, sorry, folks. Please don't speak.
Clothes that you have in your room. I was
Okay,
gonna try
guys,
to hem that shirt, but I guess you could wear it. And
Somebody is speaking and
Did you have pants? There should be pants.
Let's
in
just
your
do
room.
this. All in favor of the motion to enter executive session at fire.
What about in your drawer?
Please say aye.
I think.
Aye.
All
Aye.
opposed, please say nay. Any abstentions? Okay, motion carries at fire. Fire,
And I
please
do
mute
have pants
your
on.
mic.
Who cares?
Okay, at NYSERS, is there a motion at NYSERS
Unmute, Penny.
to?
David Katzman.
David Katzman, thank you, to enter executive session. Is there a second?
Second,
Who said the
Lawrence
second?
Bosley.
Lawrence
Second.
Bosley. Thank you. Lawrence Bosley beat you to the punch, Aldrin. Keep your mics on. Any discussion? All in favor of the motion at NYSERS to enter executive session, please say aye.
Aye. Aye.
All opposed, please say nay. Any abstentions? Okay, motion carries at NYSERS. Now mute your mics at NYSERS, please. At teachers, is there a motion to enter executive session?
Tom Brown, so moved.
Perfect, Tom. Thank you. Is there a second?
Dave
Deborah
Kazantzis.
Petty, second.
Deborah Penny, thank you.
Sorry, David.
Any discussion? All in favor of the motion to enter executive session at teachers, please say aye.
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 All opposed, please say nay. Any abstentions? Okay, motion carries at teachers. Just confirming that we still do not have a quorum at police. So there's no need to exit public session because we don't have a public session at police, and same thing at BERS.
John, I just want to note for police that we'll be joining, at least Stephanie Schumann and I will be joining executive session, even though there's not a quorum of police.
Perfect, thank you. Okay, so now here's the instructions for joining executive session. You're now going to leave this meeting. You're going to hit the leave meeting button in the bottom right of your screen, and then you have a link to the executive session Okay. Phil Dukes, you got your hand raised. Is there something you want to say? Unmute yourself if you do.
Yeah, it
Yeah.
just took a second since I'm doing this all with a phone. I do not have an invite to the teachers' executive session still.
Okay, so.
I've got them from half the other funds, but not
Yeah.
teachers.
Okay.
We'll take care of that, Phil.
Thanks.
Thanks. So send Phil the executive session link. So there's a separate executive session link for your board. Not the caucus link, the executive session link, okay? So make sure you now join the meeting through the executive session link after exiting this public session with the leave meeting, after you hit the leave meeting button in the lower right, okay? Then you're gonna
John,
sign up.
no one in my office has a link to the other session.
Okay, so.
We'll take care of that.
Take care of that. Okay, thank you. If there's a technical problem or a link problem, reach out to Kim Boston. I'm going to give her email again in the controller's office. It's kboston@comptroller.nyc.gov. Okay, so it's now 11:04. Please, what I would suggest is you leave this meeting, go right back into the executive session, mute yourself, take a small break, and we'll get started with the executive session at 11:15. Okay? Any questions before we leave this meeting? Okay, great.
No, and John, I just want to remind members of the public who are viewing this meeting, this is the conclusion of the public session, and the executive session will be for trustees and staff only.
Thank you, Susanna. Okay, thanks. See you all shortly. Bye.